Hi everyone. Welcome to today's AMA. My name is Ravi. I'm the co-founder CEO at Zeeve, and we are very thrilled to host this session with one of the most forward-thinking projects today in the institutional DeFi space, that is Entry Network. So institutional DeFi is at an inflection point. We are already seeing a lot of traction this year, stable coins, some of the regulations like Genius Act or MiCA coming into picture. And there's a massive potential, like trillions of dollars. Yet most traditional institutions today, they are careful, they are cautious because of the compliance and security gaps. And Entry Network is tackling exactly this challenge by blending programmable compliance, privacy, automation, and a lot of very exciting stuff. So I'm very excited to have this AMA. And today we have Rodney from Entry Network to be part of this AMA. So first of all, Rodney, welcome on this AMA. And we would like to start by knowing a bit about yourself, your Web3 journey so far, and your motivation behind Entry Network.
Thanks very much, Ravi. It's actually interesting. So a whole lot of things have converged. So I've come out of traditional finance. I've been an SME for blockchain for both EY and PwC, including in Asia. Done work with central banks where they've looked at using blockchain technology to settle accounts between banks. I've been working with it for a long time. And I've also worked with Cardano. I did a strategy piece with IOHK and also with the Cardano Foundation. And along my journey, I did an MSc in digital currencies. And unlike you, I haven't got my doctorate yet. I am working on it. And as part of my research, I came to, when I was looking at my area of research was in novel assets. And the challenge I started finding was, one, there wasn't a lot of good research on it. And two, nobody's ready for it. Plus, all my work when I worked with consulting was the challenge of getting regulated institutions to look at blockchain, let alone Web3. It was a big challenge. So, and that actually prompted me to write a book, which is called The Compliance Revolution. And it's talking about zero knowledge and also blockchain. So, yeah, it's been an interesting journey. I've worked in payments and banking for over 20 years and capital markets as well. So lots going on.
Oh, that's, I think, super exciting. And your past experience, your journey sounds incredible. I think that now totally makes sense, what you're trying to do and the problem that you're solving in the institutional DeFi space. So, Rodney, we have seen that over the last 5 years post-COVID, we have seen the surge of DeFi, and we have seen, very high TVLs, like 180 billion, but still a very less percentage, just in single digit, the capital that comes from the institutional money. And that's where we see the real gap, institutional investors. And we know regulatory clarity, which is getting better now, at least in 2025. And then risk controls, KYC, other compliances, whether it be data, jurisdictions, and lots of challenges are there, which are major blockers today. Based on your experience, you're trying to do, there is clearly a structural gap that we see between DeFi's open innovation and TradFi's compliance requirements. So how do you see this gap, and what really is holding those trillions of institutional dollars that can come into DeFi?
It's actually really two things. And I think just as a point of interest, over 80% of most large banks' money is spent on being compliant and keeping the systems going. So not innovating. That's one big impediment. The second impediment is they're highly regulated. So you've got over 100 trillion US dollars stuck, because the first thing that happens is, do we know the parties? So things like the travel rule is an example. The next thing that happens is, do we know the asset? Is it tainted? So you imagine going to a risk committee or compliance or legal and say, oh, we're going to stake some Ethereum. Well, is any of that tainted? Because they're going to worry about their assets or their funds being held for investigations or fined because they've actually dealt with tainted assets. So it's a lot. That's even before you get into the systems that they use. It's actually the policy processes and the regulations they have to comply with. That's the biggest problem they've got. If they can't be sure who they're dealing with, a wallet address is not who you're dealing with. It's an address. It's a bit like sending something to a bank account. You theoretically know who the owner is and where the bank account is, but there's a lot that has to go on if you're in the institutional space to actually send money to a bank account, let alone get money back. So I think the biggest problem is it's outside their risk mandate. And you look at some of the fines they get, and then you have the wonderful things like Mount Gox, and you also have FTX. You've got a lot of things that have happened that have tainted a lot of opinions about this. And a lot of the regulators are very, very worried.
Got it. No, I think that's a very interesting point that you have mentioned. So, but the way I see it is that is only one side of it. So one side is there we have digital assets and how the banks can manage digital assets in a very compliant manner. And there are quite a few startups now who are helping, like Fireblocks is pretty big. And then there are a few other digital asset management. I think a lot of fintechs have got into digital asset management, bringing desired compliances, security, and so on and so forth. But the other side is there is a lot of capital which is ready to be tokenized. And we are seeing a lot of interesting initiatives, whether it be KineX's from JPMorgan or various like BlackRock, tokenizing their treasury funds. So what do you see on this side where we see traditional assets, including fiat, coming into the Web3 space through the means of tokenization and yet managing all the compliances?
Well, actually, it's really interesting. So there's some really good people out there that, I can't remember, forgotten because I was at an event recently, and they specialize in yield for institutions. And if you talk about, everyone getting into stablecoins and the big banks, JPMorgan, a lot of that's based on their own platforms. So it's not open in a lot of ways. It's still a risk. A lot of institutions will still back away from it. So you're right. There is a lot coming on board, and it's going to get even more. Right now, you've got stablecoins, and most people have recognized that stablecoins are the best thing for cross-border payments. If you're going to use stablecoins, and banks are starting to look at that, so they're looking at how they manage that, and is the asset itself compliant? So a good example of that would be Circle's accepted in Europe, whereas Tether isn't. So that you've got regulations, you've got jurisdictions, and whether you fit in with them. And you've also got lots of challenges around, was that US dollar stablecoin used in some illegal activity? So you've still got a lot of that suspicion there. So I'm not saying that there aren't organizations starting to get on board. And real world assets, tokenization, there are some platforms that just specialize in doing that. But a lot of these solutions require backward looking forensics. That's where we differentiate. We want to deal with clean parties and clean assets. So do it at the big point before you actually transact. Use AI, federated AI, to work out whether an asset's clean or the parties can transact. So, and I think that's a big differentiator. The other thing is some of these solutions are often in closed groups. I don't know, I've been around for quite a while, so there was a lot of stuff based on Hyperledger that was closed. There is R3, their solution that a lot of the banks invested in. There's lots of different people trying different solutions, but regulators now going, actually, well, we're probably going to have to interact with public blockchains. And that's where it starts getting very interesting.
Oh, I think you're absolutely right. I absolutely get your point. You are very right. So if you see KineX's, etc., like the use case of tokenized deposits, or for example, Canton network, which is focusing on capital markets. So there are quite a few initiatives, but they are still consortium led and in a closed circuit. But the way we see it is, and this is based on my experience that I'm talking about, that now banks are seriously looking at some of the public protocols to see, how public protocols stack, because if they want to open up, they need to have interoperability. They need to have compliances at the level of decentralized networks, which is actually not very easy. So I'm totally getting your point that you are right to bring it in the public domain in the retail side rather than just getting stuck on the wholesale side. I think it's definitely require much, much more. So one of the aspects going through entry.network, this whole idea of programmable compliance. And we have seen programmable money, we have seen programmable liquidity. But compliance as a code is something very new and seems very, very powerful. So, Rodney, could you break it down for our audience as to what does programmable compliance really mean in practice? And and
Okay.
and how does it transform, how frameworks like MiCA or FATCA and SEC guidelines when we talk about on-chain implementation?
Okay. As the key thing is we talk about clean parties and clean assets. The way of doing that, we use three components. We have zero knowledge IDs. Why is that important? Because you don't want personally identifiable information transmitted, and often it's not required. If I'm looking at a business, I want to know who the principal shareholders are or beneficiaries. There's all the standard set of tools that traditional finance is used to having to apply. You can't do that with a wallet. So we can do that, and we apply zero knowledge IDs for that part. We then have a regulated asset registry using a high speed Avalanche 9000, and thanks to you guys, a enterprise, in fact, a banking level solution there to enable settlement finality and high transaction speeds, as well as, we're still supporting the decentralization by having multiple nodes. And the last bit is federated LLMs. That's where we're slightly different, because federated LLMs mean we can have some LLMs in the European that are focused on MiCA. We can have some for the Genius Act in the US. And when a transaction goes, it's actually looking at it real time. Now, remember, the first thing is when you get onboarded, we use the AIs to help onboard both the assets and the parties that are going to transact. And it applies the rules because they're going to change all the time. So you could apply MAS rules to Singapore and then correlate, because you're actually going to Europe, you've got to do MiCA as well. So and of course, the things like the travel rule. So it's actually building a platform that we do it before the transaction happens rather than transact gets held somewhere. So I can speak from personal experience. Even in the traditional banking system, things can go wrong. It was involved some stuff with Swift, and it took 3 months to get 100 million back for a large enterprise. They were not happy campers, and it's not unusual. Whereas if you do it up front, you know that the transaction is going to go through. It's not going to take a long time, and more importantly, the party and the assets clean. So that's really important for real world assets, and it's not just for retail. I think if you think about it, there's a large number of financial institutions that aren't in a position to join some of these big consortiums, and part of that is, if you look at Swift is the global, effectively for shoveling money around between banks, or the Bank of International Settlements, the central banks. The interesting thing with all those guys is a lot of people and a lot of organizations and a lot of banks can't participate because they either don't have the sufficient capital or liquidity, or they aren't in a jurisdiction that's allowed to. So you've got a lot of restrictions in there anyhow. And then you get into actual enterprises. Say you want to do trade finance. Those, would not be allowed to join some of the banking consortiums. So I think having it as a programmable compliance with the concept of doing it before you transact and before you onboard is very important.
Absolutely. I think I find this concept very, very fascinating. So encoding compliance logic into these smart contracts. There has been, we have worked in the past with ERC 735, 745 for the decentralized identities, and 1400 and few other ERCs for compliances. I think this is actually very, very interesting. This removes the overheads for any bank or any other financial institution to see whether they are, dealing in a compliant token, whether it be tokenized asset, whether it be native digital asset. No, this is absolutely amazing. So I think you quickly mentioned about ZKID and Federated LLM. So I believe that these are strongest technical differentiators in the way entry is handling identity and privacy and other compliances, right? So, could you walk us through how these two work together, and are there any other components that you are planning to make it, which is like an ecosystem handling all the compliance concerns of institutions?
Yeah. So I don't care where the assets come from, or even what chain the asset's sitting on. Once it's wrapped and is effectively on our compliance layer, then it's fine because it's clean. So there's two parts to it. The zero knowledge is you actually need to get a digital ID, effectively a tokenized ID. So it's a digital ID either for an institution or the individuals, and you will need both. So you're a company, the principal shareholders or whoever's allowed to transact would need to be identified. That's usually covered by financial regulations. All important officers have to be blah, blah, blah. So we would allow them to we would help them create those appropriate ZK IDs. That's really important. So we've got an identity for the organization or the enterprise and the parties that need to have it, especially if they're approving things. That's part of the onboarding process. Exactly the same for the assets, except the assets don't need a ZK ID because they don't need to be obscured. With the next element that's really important is the actual federated LLMs. So they're effectively the real-time learning tools. They're applying the regulations based on the jurisdictions you want to act in. So the example I would use that I think is quite interesting is I'm sending I want to do a transaction between USA, a particular state, and Hong Kong. At the moment, that's probably okay. But in 2 weeks' time, there may be a bit more blow up between the USA and Hong Kong, or it may become a restricted activity. But you could send that same asset or you could do a transaction with Europe. So the LLMs are going to be watching, and they would look at that transaction and go, well, you can't do that to Hong Kong anymore, and this is the reason why, but these jurisdictions are okay. Even if the parties are already allowed, so you're dealing with the entities that are actually going to be transacting and the asset, because that's always going to change. Stablecoins are probably the best example because you'll see some jurisdictions blocking or not allowing certain types of stablecoins or effectively flagging them as illegal. So you're going to have this continuous changing regulatory environment, and that's what we're going to need. So we're going to expand that. So obviously we're going to start working with the Mika Foundation, because we've got a lot of experience, a lot of knowledge in that area, but apply as we go along. Things definitely like the Genius Act. Actually, the Genius Act is one that really intrigues me because the Act's quite good, but they haven't figured out who's actually going to enforce it, which agency. And in fact, if you look at it, you really need to be a bank to be compliant, which is why only some of the big tech companies and very large banks are finding it okay to go and launch their own stablecoins. Now they've got a framework to deal with, but they're still going to have to figure out which regulatory authority they're going to deal with. So those things are going to change and progress and grow. So the way we look at growing is literally have the zero knowledge and the identities, have the initial LLMs, and expand that as we go to look at other transaction types that have regulatory compliance. So if I'm a Web3, and I'm really excited, I've got a great decentralized DeFi solution, and I'd like some of that regulatory involved, then I know how I can do it, because I'm going to need to know who the parties are so I can do the travel rule. And I'm also going to need to know that I am compliant in the assets that are being dealt with.
Got it. No, I think that's a very interesting distinction you made in terms of maturity of the regulation itself. I think Genius Act is something very, very new, whereas MiCA has been there for quite some time, and Europe, I think, has been leading on the regulation side. So just a small follow-up question. So we have a lot of startups, fintechs, who are building use cases like cross-border remittances and capital market use cases, and then tokenization of real-world assets. So they can use ZKID and programmable compliance, your federated LLMs, as an SDK, as a tool, or how does your offering works?
That's exactly the way we're engineering that. So the reality is, we'll have a sample game, an example, or for some organizations, it might, like a trader or a brokerage might be perfectly okay. We'll have a front end, but we'll have APIs and that, because depending on who you are, you want to integrate it. Now, a lot of brokerage. Well, that's the other challenge. One of the jobs I've done in the past is actually change out legacy payments or settlements between the banks. And it took 2 years. And if the Treasury and the central bank hadn't said, you have to have it finished by this time, they'd probably still be doing it. It's very, very difficult to do. So you need to show some way that you can integrate or assist with what they're already using. So using APIs and being able to pass information in a compliant and secure way is very, very important. So for some of the smaller guys on Web3 projects, you can integrate it into their project, or let's get rid of that. Integrate it into their project, or they could use our tools. So we'll have some tools available, but the other thing is you can integrate it in your project. So it basically becomes painless or seamless for them.
Got it. No, I think that's very interesting, and we definitely would be very, very interested to explore this further for some of our customers, and add some of these components into our partner integrations. So now coming on a bit on the architecture side. So you chose to build as a sovereign L1 using Avalanche L1 stack rather than using a shared subnet or a EVM rollup or any other design. So and we know that Avalanche L1 offers very high TPS, low latency, high customizability. So there's quite a few configurations and customizations that you can do to achieve control over economics or compliance rules and upgrades, updates, etc. So from your perspective, what was your motivation to choose Avalanche L1, and how Zeeve infrastructure expertise helped you bring this network to life?
Okay, well, actually leveraging you guys, Zeeve, has been really, really important. But the reason Avalanche is it's quite logical. There's two factors that I think are really, really important. One, the very fast settlement time in financial services, certainly in banking, that settlement finality is a really, really important thing. I'm not going to go into it, but it's an interesting area. And in some cases, it's legislated by, it's part of the law governing the central bank and banking systems. So you need to have surety of settlement. The other thing is you need a reasonable transaction volume. And the third thing that I really like, and I think is really important about Avalanche 9000, is you can go across other Avalanche 9000 chains. So as an example, it allows us at time, potentially to build effectively federated Avalanche 9000 chains. That's very important. There's a good set of tooling, and its EVM is very robust. And again, because you provide such high level of SLAs and compliance and all the certifications that are needed, it makes us a lot more confident in dealing with regulated institutions. My experience is, if you can't tick a couple of the boxes like SOC 2 or something like that, then you're going to have you won't get them, even if it is a great idea or a wonderful tool. You just won't get an institution using it.
No, absolutely. Yeah, you're absolutely right. I think from a architecture standpoint, Avalanche does offer very low latency, very high performance, faster settlement times. And on the other side, there's a very robust partnership ecosystem that we are building now. We started with just few of them that we picked from our roll-up partnership ecosystem, but now we have already, for interoperability side, one is ICCT that you have rightly mentioned. You can liaise with other Avalanche L1 chains, but then we have also now added support for USDC bridge contracts, as well as through Hyperlane, connecting with Ethereum, EVM chains, Solana, and other non-EVM chains as well. So, and then there are tons of other initiatives that we are taking there. So, of course, Avalanche and L1 is a very solid choice, and we are very excited to partner with you in this journey. It's a very innovative venture, and it's pretty cool to be your partner on the infra side.
We're really excited and looking forward to it. It's so refreshing to find a partner and an environment that makes it easier or accelerates your deployment and getting on and doing things. If you go to a lot of, look at the other, a lot of the big cloud. even when they do offer a service, they don't necessarily, they're usually slow to apply, and there's a lot of challenges. Whereas working with you guys, those problems are gone. It's not an issue.
Oh, absolutely. So now, we are coming to the end of our AMA. One last question. So what's next for entry? What can institutions or community expect in the coming months? And how do you see this shaping the broader landscape of compliant DeFi?
I think it's actually going to be really exciting. So Q1 next year, we'll have our MVP up, focusing on the ZKs and the, effectively the AI compliance bit. The other thing we're looking to see is partnerships. We want to have, by the end of 2026, 1,000 partners on there. That could be 1,000 institutions or projects using our platform. And as part of that, we're going to need to work with partners. So that's another thing that we're working on as well, is partners will help do the integration deployment. Because, as I said, a lot of organizations don't have the resources themselves and find it very difficult. So just like we're really leveraging you, we also want to help institutions leverage our solution in as simple a way as possible. So those are the tools that we're going to start rolling out, and that's part of our vision for the future.
Got it. No, I think very, very interesting. So anyone who would like to explore the products, you can always connect with Rodney, and you can log into entry.network and check it out yourself. Follow their Twitter account to keep updated about the progress. It's going to be massive, massive, as Rodney said, launching their next phase in Q1 next year. I think we are going to see solid innovations happening. So thanks, Rodney. That was incredibly insightful. And I think it's inspiring to see how entry is redefining, reimagining DeFi infrastructure, especially from a compliance standpoint, from privacy, composable privacy. And for everyone listening, if you are building institutional DeFi RWA platforms, you can learn more about Zeeve infrastructure and entry's programmable compliance on chain on our socials, and follow us, share, and keep building. Thank you.
Thank you very much. Really great pleasure to speak. And it is exciting times. I mean, that's why I'm involved in the project. So I wrote the book as well, because it is a big challenge and it needs to be dealt to. Because once you start dealing with it, you'll see that institutional money be able to roll into DeFi. And in fact, one of the comments I made in the book was, right now you have DeFi and TradFi. Give us some time in the future, we will just have Fi.
Oh, I am 100% agree, and I'm on board. And I'll definitely love to, have a look at the book, and chat with you sometime in future.
No, that'd be great. I'm really enjoying this. Thank you so much.
Right. Thank you. Thanks everyone for joining this AMA, and do follow us for more such AMAs, bringing incredible startups, innovations in the Web3 space. Thank you. Keep smiling, keep building.